Hey guys, welcome back to the channel. Today I'll be exploring this new ARK Invest ETF called ARKX, which is the ARK Space Exploration and Innovation ETF. This is a brand new ETF that just came on the market, but I wanted to calculate its historical pricing pre-debut to see how the performance is compared to a benchmark. So luckily for us, they do provide the weights and the holdings as a CSV file. So I'll be downloading this file through R. We're gonna gather all the tickers, assign them their weights, and then calculate the performance. So let's go take a look at the code. All right, here are some of the packages we're going to require. As I mentioned, I'll be downloading the CSV file in R. So this is the link to get the holdings. So let's go ahead and download the file. All right, so let's go take a look at the holdings inside this ETF. So we have a total of 39 entries, and here we have the company name, the ticker, the QSIP, the shares, the market value, and their assigned weights. So what I'll end up doing is I'm going to go ahead and grab the tickers. I'm going to get some data from Yahoo Finance and apply the weights. But the problem here is we need to make these ticker symbols Yahoo Finance friendly. So for example, this ticker for company Kamatsu Limited is 6301, which will be rejected by Yahoo Finance if we just go ahead and insert this ticker. So we have to manually look up these tickers so that I get the correct data. And what this tells me is that, for example, this company, it's probably held in foreign currency, so we can't use the ADRs or any comparables, but I'll go ahead and provide the comparables just in case you want to take a closer look at it. There was a few tickers that we needed to change, so let's go back to our script. But before we do that, let's print out the sum of the weights. So here we have a total of 98.08%. We're missing a couple of percentage points, but this just tells me that they have the rest of the percentage probably in cash. So we'll go ahead and compensate for that. All right, so for the tickers we need to change, the first one is Mutang Class B. Its comparable is this ticker symbol here, MPNGF. So I was able to get this foreign ticker from Yahoo Finance by just placing .HK after the ticker symbol, which again is probably held in foreign currency. So let's go ahead and change that ticker. All right, the next one is Kamatsu Limited. Its comparable ADR is KMTUY, but in order to compare apples to apples, I'm just going to place a .T after the ticker, which again is held in foreign currency. The next ticker we need to change is Garmin Limited. I couldn't find any ticker with Garmin-U or .U, so I just went ahead and replaced what they have in their breakdown with Garmin, GRMN. So I'll go ahead and run that. And then the last ticker I needed to change was Dassault Systems from the Paris Exchange. So I just went ahead and replaced DSY with DSY.PA. So I'll go ahead and run that. Now in their breakdown, they do have some money allocated to government bonds through a mutual fund, I believe. So if we take a look at the breakdown, the very last observation is this Morgan Stanley Government Institutional 8035. I looked up the QSIP, but I couldn't find a ticker. So I actually tried to replace it with a comparable, which was MVRXX. But unfortunately, Yahoo Finance doesn't let us get historical data for mutual funds. So I'll show you later down the script what I did to compensate for that. But if we keep scrolling, I'm just going to extract the ticker and the weight. I'm going to do some formatting to the column names. And then I'm going to divide the weights by 100. All right, so I'm going to go ahead and drop the last row, which has the allocation to that mutual fund. I'm going to go ahead and grab all the formatted tickers. I'm going to create a new environment. And I'm going to go ahead and require historical data for the tickers starting at 2010-0101, and I'm going to send all the data to my environment called E. So I'll go ahead and run that line. All right, I'm going to go ahead and merge all the adjusted closes. I'm going to format the column names by dropping the .adjusted after each ticker. So if we take a look at the adjusted data, here we have all the historical data for the tickers inside this ETF. Now we do need to format these NAs. So I'm going to go ahead and backfill all the NAs since we will be dealing with percentages, not the actual prices. Also, another thing to note is that for some of these tickers, we don't get actual data until further down the years. For example, for this ticker, I think we don't actually get data until late 2018. So if you're not satisfied with this method, you could always start at a later date. But for the majority of the tickers, I think we actually do have some data starting at 2010. So let's go back to our script. All right, so I'm going to backfill all those NAs using this line, and then I'm going to go ahead and fill the NAs going forward, which would just be the last row. All right, so I'm going to go ahead and calculate the percentage returns for each day using ROC. So since our weights don't add up to 1, I'm going to go ahead and add a cash column where I will be allocating the rest of the percentage, which I believe is less than 1.5%. So it shouldn't make a big difference. And then I'll add that cash column to our returns data frame. So I'll go ahead and run this block. And the cash column is just zeros since cash doesn't return anything, but in reality, they do own a mutual fund. But since the interest rate is so low, I just figured I would just use 0. All right, so let's take a look at the returns data frame. So here we have the daily returns for each of the tickers. And if we take a look at the last column, we have successfully added this cash column to our returns data frame. So now we need to apply the weights, but before we do that, we need to do some formatting. So we need to format a couple of tickers because if we take a look at the weight variable, all the tickers that begin with numbers do not match our actual tickers in our data frame since they begin with an X. So I'm going to go ahead and change those tickers that start with numbers so that they match up with our returns data frame. Luckily, it's just 2 tickers. So afterwards, I will transpose the weights. The first row will be all the tickers and the second row will be all the weights. So we'll go ahead and run that. And then I'll put my returns data frame in the same order as my weights so that all the weights get applied accurately. So I'll go ahead and run that line. Alright, so the next thing I'm going to do is matrix multiply the stock returns by their weights. But no, since we're using daily data, this might not reflect the most accurate, since what this actually represents is keeping the same weight for each stock every day, meaning that we have to rebalance every day in order to keep the weights exactly the same. But later down the script, I'll show you how you can use this to apply it to monthly data, which might be a little bit more feasible. So I'll go ahead and run these lines. And then I'm going to go ahead and plot the performance. So if we take a look at that chart, so here we see the hypothetical performance of this ETF, and this is the actual performance if you were to buy and hold. But I'm going to go ahead and add a benchmark so we can compare it to. So let's go back to our script. Alright, so for the benchmark, I'm just going to use SPY. I'm going to do some formatting and then merge that with our ETF so that we can go ahead and plot those two together. So I'm going to run that block. Alright, so let's take a look at the chart. Alright, so we see that the performance is kind of identical to the SPY, and then what seems to be towards the beginning of January 2016, they kind of diverge. So let's take a closer look. I'm going to go ahead and plot this from the beginning of 2020 to see how it has performed since then. So I'm going to go ahead and run that line, and we'll take a look at the plot again. So here again, we see kind of a strong correlation with the SPY, but a clear outperformance of this ETF. All right, let's take a look at some statistics compared to our benchmark. So I'm going to use table stats. So by taking a look at this table, we have the same number of observations. Our worst return for this ETF was close to 12% and 11% for our benchmark. We do see that our mean is slightly higher for the ETF than the benchmark, and the same goes for the maximum or best return in a single day for the ETF compared to the benchmark. So by taking a look at the standard deviation, this ETF is slightly but not significantly more risky than our benchmark. All right, so let's go back to our script. All right, let's take a look at the correlation. So for the correlation, we have 86%, which is highly significant, but we were actually able to see that from the actual chart. So let's go back to our script. This next part is essentially the same thing, except we're going to analyze the monthly returns instead of the daily returns. So I'm going to go ahead and run this block, and I'm going to plot these. All right, so let's take a look at the chart. So we do see that this performance is similar to using our daily returns, but I think using monthly returns might be more feasible due to the rebalancing effect. And another thing I wanted to add was that the weights might change through time depending on what the portfolio managers decide. Alright guys, so this concludes the video. I hope this information was useful. Please let me know what you guys think. Please subscribe to the channel if you haven't done so already. Thank you for watching, and I'll see you guys in the next video.